Hey, good evening, everyone. Welcome to Paytm Money Talk. And today we have got a very interesting topic. And the topic today is strategic diversification, balancing mid cap and large cap mutual funds in your portfolio. It's an exciting topic. And the guest for today is Mr. Akhil Chaturvedi. I'm Neeraj Gogoi, your host for the talk. And this talk is powered by Paytm Money. Now, currently, we are having very interesting time. India is one of the fastest growing economy in the world, very robust economy. We are approaching elections, and when you look at the market, we are in the middle of a bull run. Although in Nifty you can see some corrections, but still in the mid cap, large cap, small cap, they are not taking the name of stopping the rally. So it's very interesting time. But again, as an investor, you need to know what the nitty gritty of investing, what is the next step, how the market is likely to behave, where you can really create your wealth for the long term. These are all the different interesting topic that you are going to discuss today. Now, again, before I start, very quickly, let me tell you what the Paytm Money Talk is all about. This is where we get the experts from the industry with decades and years of experience in the market. We try to introduce new concept, new strategies of investing. So our endeavor is to constantly, enlighten ourselves with new kind of knowledge, skills, so that we can become a better and better investor in the market today. So yes, this is the Paytm Money Talk is all about. So let's start. Okay, welcome back. So let me introduce my guest today. He is Mr. Akhil Chaturvedi, Director and a Chief Business Officer at Motilal Oswal AMC. He's okay. Okay, he is again. He is a head of sales operations, international business, product, and business development. He has been with Motilal Oswal AMC for over 10 years and has more than 22 years of rich experience across organizations such as Birla Sun Life Asset Management, Birla Global Finance, and Diva Asset Management Limited. His last assignment was with Diva Asset Management Private Limited as a head retail sales, where he was responsible for setting up sales distribution functions and was actively involved in product development and launch strategies for mutual fund schemes. So, welcome. It's a great to have you on board today, Mr. Akhil. If you can switch on your camera.
Yeah. Hi, Neeraj. Hi,
Hi,
Neeraj. Thank
Mr.
you so
Akhil.
much. Thank
It's a
you so
great
much for
pleasure to
the.
have you here today.
Thank you, sir. It's my pleasure, my honor.
Thank you. Thank you, sir. So it's a very interesting time, See, we had a very powerful rally few months back. Last 1.5 months, we have been consolidating, we have been correcting. On the other hand, look at small cap, mid cap. They're not taking the name of stopping it. Even today. So what's happening actually? As an investor, many times we try to figure out so what's exactly happening. Can you give us a big good understanding about the market?
Yeah, Neeraj. So what's happening in small cap is that after a very long period of time, I would
Mhm.
feel almost last 5 years, we have seen that small caps have actually done terribly, in terms of performance. So if you look
Correct.
at the number on Nifty Small Cap 100 Index in 2017 was about 9,500.
Hmm.
And today, after all this rally, what we have seen, it has reached up to 11,500. So if today also, if you see 5 year, 6 year return, it will look very muted.
Okay.
Okay, but
Mm.
so I feel that there is a catch up which is happening in the small cap space. Mid cap segment did extremely well consistently for the last few years. Large caps have been very stable, but small
Hmm.
cap was a segment which was which is where we think that there was value which was available, and smart investors started to allocate big time in small cap, and not in the last 1 2 3 months, but they have been allocating consistently over the last 12 months. And
Correct.
we have seen almost 35 to 40,000 crores of net flows in small cap mutual funds. So there is a tremendous appetite. People feel that there is a value which is available. And why you would feel that? One, of course, is the valuation. Secondly, what we are seeing is that as the economy is doing well and the economy is
Mhm.
coming back in a big way, uh, the companies within the small cap, mid cap space are demonstrating some very exciting earnings growth numbers. So we have seen almost upwards of 30-35% earnings growth on the mid cap index, slightly higher on the small cap index. So we are seeing very strong growth. And uh, in fact, up till a quarter back, Nifty small cap index was actually at discount to Nifty 50. So you had good strong
Right.
growth, but valuations were below Nifty. So any smart investor would like to think while allocating to go more the counter cyclical way. And wherever there is value available, whether it is large cap, someday large cap will be exciting, someday mid cap will be exciting. But for today, small cap specifically is looking very very exciting, and I think the momentum is there. Flows are very very strong, and like I said, fundamentals are looking good for this segment. And generally, last point, we have seen that in rising economic cycles, mid caps and small caps do better than large caps. In a sideways economy or a slowing down of economy, large caps give you that protection, and there is heavy correction in mid caps and small caps. We are in a positive cycle for now.
We are in a positive. Fantastic. I think you have given in the very first, in the beginning, you have given very good insight. At least,
Yes.
our viewers, they can strategize. What
Yes.
they can do, where they need to allocate. But at the
Yeah.
same time, large caps also. When the economy as a whole is going to do well, we are investing lots of money on the infrastructures. So, what is your take on large caps? Because if you look at banks, for HDFC banks or even Reliance stocks like Reliance, they have not broken out as such, right?
And they will
Again,
not. Neeraj,
hmm,
large caps are the Navratna companies of India.
okay.
The top 50 companies or the top 100 companies, they are very large companies. They have been in existence for 30, 40, 50 years, even more. And
Hmm.
very, very strong, very healthy balance sheets. They have lived through multiple cycles. So you will find a lot of stability, a lot of security in these companies, and therefore at all points of time one should definitely have large caps for the downside protection. At the same time,
Absolutely.
it's a classic rule: if your risk is low, then the return also
Hmm.
is low. So
Correct.
definitely your risk of losing money in large caps is low, but proportionately the extent of return you can make from large caps also will be limited. To
Hmm.
make much more than what large caps are giving is where you try to give a dash of mid cap and small cap to your portfolio to get that higher return profile. Now, how you play between large cap, mid cap, small cap will depend on your risk profile. How long term you can be, how much drawdown you can take, all of those things. But large caps for will be good at all points of time. I would say it's a all time, all season allocation.
It's a all season allocation. So as an
All
investor,
season
as a
allocation.
all season, as a
Yes.
prudent, as a smart investors, I need to have allocations in all the large cap, mid cap, small cap. And in fact, today we're
100%.
going to talk about you got a fund called large cap and mid cap, right? We have heard about mid cap fund, small cap fund, large cap fund, but it's a blend of large cap and mid cap. Can
Yeah.
you tell me what is this? We know that large caps basically 100 stocks are there, mid cap
Yeah.
150 stocks are there, right?
Yeah.
So, what about this mid cap and large cap allocation? This fund is all
Sure.
about.
Sure.
Yeah.
So, a couple of years back, SEBI came up, to basically make investors understand in a more simplistic manner, because there used to be hundreds of funds. They
Right.
wa- they they came up with this categorization of schemes under multiple buckets. So they created a bucket of large cap. So all large caps will go into that large cap bucket, mid cap bucket, small cap bucket, and then there was a large and mid cap bucket. Right
Mm-hmm.
now, within these buckets, they defined that how will you categorize a large cap fund, which means that minimum 65% of your portfolio should be in the top 100 stocks. Similarly, if
Mm-hmm.
you're managing a mid cap fund, minimum 65% of your portfolio should be in that 101 to 250 universe.
Mm-hmm.
The large and mid cap, what they said, and which we really like a lot, is
Mm-hmm.
that in true form this becomes a multi cap kind of a product, because the cap, what how it is defined is that at any point of time 33% of your portfolio has to be in the top 100 companies.
Mm-hmm.
The other 33% of the portfolio has to be in the next 150 companies, which
Mm-hmm.
is the mid cap space.
Mm-hmm.
The rest 33% is flexible depending
Okay.
on fund manager conviction. He can
Mm.
either be in small cap, he can either be in large cap, mid cap,
Okay.
or a combination. So it act, why will you come in a flexi cap, multi cap category, is that you
Mm.
don't want to do timing of when to go in large cap, when to go in mid cap, when to go in small cap. You want the fund manager to decide that and do that rebalancing for you. What we observed was that in flexi cap category, where the
Mm-hmm.
mandate was to go across market cap buckets, most large funds ended up being more biased towards large cap. It was becoming more and more kind large cap kind of a product, right? So this is where I feel that for investors who want to really enjoy true diversification across large cap, mid cap, and small cap, then this category, which is large and mid cap category, is really well defined, and it falls under the regulation of SEBI,
Mm.
right? We as MOAMC, we believe that this category is going to be the fastest growing. I'm already seeing that a lot of our partners and our investors are flocking into this category. It will be the
Mm-hmm.
fastest growing category. It will give you the true experience of some part of your allocation into the blue chips, some part of the allocation into the emerging blue chips, uh, and true to the label kind of experience. So I'm very excited about this category personally, and I feel this category will become very, very large in times to come.
Wonderful. Now, again, this is a little bit, slightly different. Now, see, when you talk about investment, all the big investors, they have certain philosophies. Even in India, all different. Even Ramdev Agarwalji, I know, he's got a very strong philosophy. Value, quality, and so when you talk about Motilal Oswal AMC, as such, what is your philosophy? What is your how do you select stock? Because ultimately your stock selections, your everything is based on that philosophy, right? So what is your
Yes.
core philosophy that you drive or you manage your fund?
So, Neeraj, like you rightly said, we follow the investment style of Mr. Agarwal, and which
Hmm.
he kind of created with his 40 years of investing in equities. And this philosophy is called as very popularly QGLP philosophy.
Right.
What QGLP means is quality, which is quality of business, quality of management. Uh,
Mm.
so if you are investing in equities, which is inherently you're buying a riskier asset class, right? Because markets go up and down, stock prices go up and down. So you are in a volatile asset class. You are taking risk. How to
Exactly.
minimize your risk can be done only through quality. Because if
Mm.
you buy a great business run by a great management, then you are ensuring that you are protecting your downside, because great businesses run by great management will never become zero. They can go down 10, 20, 30%. That could be your what we say is a limited downside. There could be some
Mm.
drawdowns, but it will not be permanent drawdowns, right? So downs will be limited, ups will be unlimited in quality. So we are spending a lot of time, and 90% of our filtration happens in quality. So 6,000
Mm.
listed companies, almost 5,500 companies are filtered out in the quality framework itself.
Mm.
Okay, so I have done my quality check. Now to make
Mm.
money, I need to get buy into companies which are quality and also growing, and growing at a
Mm.
fast pace. So then we look at profit growth. So
Mm.
we're looking at quality businesses and businesses which can compound its profits at 15%, 18%, 20% over long periods of time, 3 years, 5 years, even longer. So quality check done, growth check done. Quality will take care of your downside, growth will take care of your upside. Okay. Longevity means
Hmm.
longevity of quality and growth. Because we are long-term investors, we want quality to sustain for a longer period of time, growth to sustain for a longer period of time. So there's a longevity check. And finally, P is the price. We
Hmm.
have to ensure that we buy quality, growth, longevity at the right price. Because
Hmm.
if
Hmm.
you buy QGL at the wrong price, obviously, you will not make returns, or you will make returns back ended. So we have to ensure that we are buying uh, high quality, high growth companies at a reasonable price.
Hmm. Hmm.
And we have defined, I might be sounding very simplistic, but under each of these frameworks, there are a lot of checklists, or there are a lot of to dos which the analysts have to do before the stock actually comes into the universe. So in simple
Hmm.
way,
Hmm.
if you're investing in equities, a risky asset class, uh, spend a lot of time evaluating quality, then chase growth, and ensure you buy it at the good price. uh, this formula, we have seen in last 20 years, has worked in our favor, and a lot of our funds track records are available for everybody to see. So this is the philosophy, Neeraj, what we follow, and what we have been following for the
Hmm.
last many years.
Yes, even in this fund also, although there are, it's a universe of around 250 stocks, but you choose only based on this philosophy,
Yes,
the stocks
yes,
that fits that philosophy that you
yes,
always
absolutely,
pick.
absolutely,
Okay, great.
absolutely.
Now, for someone who is very new to the market, okay, now we know that, as you said right in the beginning, it's an exciting time. We have got the small caps rallying, mid caps rallying, and large caps. Yeah, over a period of time, maybe it might be delayed, but yes, they will also start as the economy starts picking up. Now, many people, new investors, probably who have not seen the risk and return characteristics of different market capitalization stocks, can you guide us on that? For example, small caps could be very volatile. You said it, large cap, over a period of time. So, in terms of how it differs from different stages of economic cycle. And again, if you can tell us something more about the economic cycle and the market cycle, where are we and how they behave in different stages of the economic and market cycle, different market caps.
Yeah, so let's take the second question first. So currently
Yeah,
we are in a economic cycle where the economic cycle will be positive. We are
correct.
we have seen India coming out of the pandemic much faster, and with a vengeance, I would say. All right.
Mm,
We feel that this growth of 7.5% is sustainable for a very long period of time. But
mm,
if good policies are put into place, this growth can easily go to 8-9% also. The faster
correct.
you compound your growth, we can achieve our doubling and tripling of economy at a faster pace. Having said so, most international analysts, research critics are now talking about 7-8 trillion dollars in the next 8-10 years, kind of a time frame. So this is
Mhm,
so if you are in an economy which is going to grow from 3.5 trillion to 6 trillion, and then 9 trillion in next 10, 15, 20 years time frame, it's very obvious that the economy will thrive. And within the economy, the businesses which operate, whether it is large
mm,
cap, mid cap, small cap, it doesn't matter. Economy is doing well. That means there is more consumption, there is more
mm,
manufacturing, there is more supply, there are more economic activities, and the benefit of economic activities will reflect in the company's profitability. The
mhm,
profitability will go up in a positive economic cycle, and that profitability will reflect in the share prices. That's how the stock market connection comes eventually, like you rightly said, in different economic cycles. When we went through, in India very recently, actually, you don't need to go too long back also.
mhm,
Uh, since 2018, when we had the ILFS scam,
mm,
then we had twin reforms, which was GST and demonetization. Then we
mm,
had the IBC law, which was put into force, where banking, all the banks actually literally went into losses.
mm,
Then we had this auto BS4 to BS6 reform, which was happening. Then we had
mhm,
the COVID, we had RERA, we had multiple things going on. It was all positive for long term, but it had a short term impact on the economy.
mhm,
So in that patch of 2018 to 2020 end is where our economic cycle went down from 6.5% to below 4%. And that 3.9% pre-COVID today is back to 7.3%
Hmm.
for last year. I believe I have from sources that last quarter also we will do 7 point last quarter, this last 3 months, April, May, June, our economy will grow at 7.1%. So
Hmm.
from below 4%, you have gone back to your long-term average of 7%, right? So we are in this kind of a cycle. So I explained to you, we have been very recently into a negative cycle. You saw the impact on the markets, you saw
Correct.
the impact on the companies and their profitability, and now the cycle is coming back. You are seeing the impact on profitability, economy also going up, per capita is also going up, and all of that is for all the reasons we can discuss maybe subsequently. I feel is going to be sustainable, it's going to be long term. And we at in house, at least we believe that we are actually in a Amrit Mahakal, where we will be a developed economy by 2047, right? So Indian economy and Indian investors should stick to India allocation for 25 years, not for 3 5 years. It's a story of
Wonderful.
25 years.
Okay, now great. So we are in a very very sweet spot now. Yes, next 10, 15, 20 years is very exciting time for India. Now we have seen many sectors, performing exceptionally well in last few months or year. You talk about defense, you talk about real estate, you talk about. So going ahead, what are your key picks? We're not asking you to talk about the stocks individually, but sectors. आपको कौन सा sectors लगता है कि ये
Yes.
बहुत अच्छा परफॉर्म करने वाला है? Or
हाँ
the
जी.
sectors which are already performing well, are
Yeah.
they going to continue their performance?
देखिए, from a long term perspective,
हाँ
maybe
जी.
from a 5 to 10 year perspective, I think this time around is going to be very similar to what has happened in India between 2002 and 2008.
हाँ.
That was a patch when
Hmm.
the growth was sector agnostic. You saw growth
Okay.
in manufacturing, you saw growth in commodities, you saw growth in real estate, you saw growth in consumption. Then that growth disappeared between 2010 and 20.
Hmm.
Only one or two patches growth was there, consumer and financials. This time around, next 5 10 years, I feel the growth is going to be very broad based. Across sectors we will see a very positive momentum. Yes, some sectors could be slightly lower, some sectors could be higher, and it could be a cyclical process. I mean, one answer to your question is that I feel that the momentum will be very very broad based across sectors,
Hmm.
across businesses. But if I have to narrow down to high conviction themes, at least according to us,
Hmm.
we are very very excited on in the financial space. It's very
Okay.
natural because financials have a direct correlation with the economic cycle, and without support of banks and finance companies, you cannot get growth. But they will give you the money to consume and grow and to build factories and build capacities. So financials look very exciting. Within financials, we are currently over allocated more towards the mid-sized banks or NBFCs. We feel there is going to be more growth as compared to the
Hmm.
large size banks. So, but broadly within financial services, banks, NBFCs, insurance companies, and to some extent playing the savings theme through some of the securities company or wealth management. So very wide space. If I have to
Hmm.
break into lenders and non-lenders, on the lenders it's banks, NBFCs. On the non-lenders, it will be savings opportunity and insurance opportunity. So that's one theme which we are excited for very long period of time. The
Hmm.
other thing within the healthcare segment is crucial, important. But within healthcare, we feel the hospitals as a segment is emerging out very very well. Especially in the last 3 years, we have seen a lot of new capacities are getting built by a lot of companies which are in this space. Maybe pharma could be selective opportunity, but hospitals per se looks to be slightly more exciting. Then we are very excited about the new age digital technology companies. We feel that these companies have understood
Hmm.
that they need to make money, and shareholders expect companies to make profits. We have already seen two companies which have already declared profits, at least at operating level, and one company at the EBITDA level. So we are seeing that that opportunity looks very good within the technology space. Now you will have opportunity in the conventional outsourcing business, coding business, but also in the digital consumption or products and services, right? So there's a very large opportunity in the IT, but
Mm,
new emerging IT businesses look more attractive than the already existing ones. We are excited
mm.
about Make in India theme. We are excited about the defense theme. We are excited about selectively we are playing power. These are some of the internal high conviction themes, and you will see that reflecting in our portfolios also if you open the fact sheet.
Wonderful. So, when you talk about financials and you talk about mid-sized banks, basically your priorities. Of course, recently we have seen big event like HDFC merger, and at the same time we have seen Geo Financial, coming. So, do you think they're going to play some critical role? They're going to make some, in your stock selections, in the whole arena.
See, HDFC is a like we discussed about large caps and mid and smalls, right? So HDFC is a bank which has a proven track record of, I think, now 35-40 years. It's been a double digit compounder for shareholders. It's impeccable management, impeccable track record. Yes, they are going through a merger process, and only we have to see with time how this whole thing plays out. And But HDFC now as a bank, as a combined entity, will always be part of most active managers portfolio, because
Hmm.
whatever you read from the research companies or the print is that this bank can still compound at 13 to 15%. So it will still be a doubler every 5 years at this rate. But yes, new names like Geo will be newer opportunities. These will be the exciting opportunities which will try to capitalize on different segments, different market segments, getting into in different way, getting into old businesses. So they may have a different model to do insurance business, a different way to
Hmm.
do NBFC lending. Given Geo being Geo part of the Reliance group, obviously they will have big plans. So that seems to be exciting. uh, we have participated in two of our funds through this company, and we feel this is a good long term prospect, looks very exciting. So in your portfolio you need to have a mix of, or a balance of, stability and agility, both, I would say. So
Wow.
be open.
Stability and agility. Okay, great. Now we know that, yes, this is a very, very good, unique opportunity for all of us. Probably kind of an unprecedented opportunity. But again, we need to talk about the risk side also. So, if at all we think about risk at this moment, what could be the risk for large cap, mid cap, this particular, of course, small cap too, or as a market as a whole, economy as a whole? What other factors do you think might play?
It's very commonly known in short term. Obviously, things are not as great in the world as it might
Mhm.
look great in India. So the world macros are still not stable. We still have a war which is going on. There are still inflationary pressures in US. US Fed is still very, very critical of how they will manage their inflation target of 2%. So how far and how long will they continue to raise yields will have an
Mm,
impact on India. Their own GDP, because of higher interest rates, is shrinking down. So that also will have an impact somewhere
mm,
in our country, right? So the global forces will have, and maybe that is why we are growing at 6.5, 7%. By the way,
mm,
right? If that would be fine, maybe we would be growing at 8-9%. But yeah, the global factors and the war, these things are still the sword which is hanging on our head. uh, let's see how that plays out, but for now India is managing it pretty okay. In India per se, things are looking okay. Bits and pieces, we find inflation moves up, but it's one part of the inflation which is food. It could be cyclical and we could come back, but
mhm,
largely x of food inflation, our inflation is broadly pretty much in control.
mhm,
Our economic growth, we have discussed, we all know that it's doing well. Our interest rates are also now stable, and hopefully we will not see any further increase in rates, hopefully. But these are some of the things which always one has to keep in mind. For some
mm,
reason, if the oil prices will shoot up, it will be inflationary, it will always have risk, and markets will always react.
mm.
If at all oil prices will go up, markets will react. If you
Correct.
if for some reason India has to increase interest rate, markets will react, and when that will happen, there will be correction of 5%, 10%. That we always say that any given point of time expect a 5-10% correction in normal time. In
Mm,
abnormal time, expect a 25-30% correction, right? So that 5-10% correction can happen because of any reason. The other risk, which is little ahead of time, maybe early next year somewhere, is your election, general elections, and
mm, mm,
so
mm,
those
mm.
things will have its own role to play in creating volatility for the market. But for a long term investor, these are opportunities. If some
E-
event happens and the market goes down, double up your investment. Otherwise, be
Exactly. I still remember one statement from Ramdev Agarwalji in 2014. So
yeah,
when new government came, he said it's like just before that, I think IndusInd Bank, Mr. Sopti had come, and how
yes,
it has transformed the whole bank. So it's
yeah,
something like change of captain, and it exactly played out. So
yes,
I'm sure definitely election is going to play a role, but I think
yeah.
it's unfolding. But
Yeah,
yes,
yeah. So we need to be
now
watchful. We need to be watchful of these events.
right.
But again, if you are a 1 year investor, you need to be worried. If you are a 10 year investor, you need not bother about it. I know. I'll put it this way.
You don't need
Yeah.
to bother. That these are
No,
part
no.
and parcel of the game. These are correct.
Yes. Yes.
Now, coming to an investing point of view, I'm a long-term investor. I'm in the middle age, just started my career probably. Now, there are quite a few questions from that because now, what happened? Lots of people, youngsters are coming to the market and they need proper guidance. They should not get carried away with the idea of doubling their money within a month or so. The way it is made up, they should be given proper education. So we need to talk about what is the asset allocation, what is a ideal allocation. So if somebody is willing to start investing in mutual fund, so what should be the ideal allocation between large, mid, as small cap? That is number one. Number two is uh, lump sum and SIP. What is the right time to start SIP? Because SIP is the way everybody, like we eat our lunch every day, food, roti हर दिन खाते हैं, तो
Hmm.
सब्जी खाते हैं. Similarly, SIP is a part of our life. So,
Right. Right.
yeah.
So,
So, what is your suggestion?
yeah. Now, see, asset allocation and risk profiling is very individualistic. For different
Hmm.
people, it will work out differently. Even if you are young, circumstances of different people will be different.
Correct.
So, keeping that on the side, for which you need an expert, and all of you are available for that expertise. Uh, very, very a general recommendation for somebody who's, let's say, in mid 20s, just got into
Hmm.
work mode, started to make money. uh, Typically we say that 100 minus 8 should be equity allocation. So if
Hmm.
you're 25, 100 minus 25, 75% should be your equities, and 25% could be your fixed income, okay, or your fixed deposit, something like that. I'm an aggressive investor, I go 100%, but that is more from a generic investor perspective, right?
Hmm.
Now, if you are at that age, you have 35, 40 years to make money, and you have many, many years to realize your first goal, which could be buying a house, and buying a car, or then education, all of these things. I think I missed out on this one, but I will strongly urge to all my friends who are in this age bracket, getting into to work mode, as
Hmm.
much as possible, do investing in equities. Within equities, since you have a lot of time in hand, very difficult to say, but I would say what I would do is maybe 40-50% mid cap, maybe 20-30%
Hmm.
small cap, and 10-20% large cap, because I have a lot of time in my hand. All right.
Correct.
uh, as you go higher in your age, you need to keep toning down mid cap, small caps, and keep increasing your large cap. So that's a general recommendation. But if you are at 25 age, be 75% in equity. Within that, be 50% in mid cap, be 20-30% in small cap, 20% in large cap. It's a
Hmm.
simple answer, right?
Fantastic.
Come through SIPs. SIPs,
Hmm.
the best time to start SIP is tomorrow morning. and the best time to stop SIP is never. As
Yes.
simple as that. You are making money every day. A part of whatever you make after paying taxes should go into investment through SIP. What SIP will
Mhm.
do is take away market timing from your hand. You will buy in good times, you will buy in bad times. In fact, you buy more in bad times. So I was telling somebody that if you are an SIP investor, you should pray for markets to fall down more than they fall up, go up. Because if they go down, you'll buy more units,
Right. You should
right?
be more
So
happy when the market are down.
yeah, so just don't bother about up and down and all that stuff. 20, 30, 40 years, do SIP. I've explained to you which segments you can do, which market cap bucket you can do. And believe me, it is magic. You will put 10,000 rupee every month. It will become crores and crores after 20, 30 years. You can't imagine.
Absolutely.
I have experienced it. I have many friends who have experienced. I'm sure Neeraj is also experiencing it. But we learned. We didn't have guidance like Neeraj out here. So I didn't do SIP for the first 10 years of my work life. I only blew money,
Mhm.
right? I only started doing SIP 15 years back. So imagine
Okay.
I've lost out personally 10 years of compounding.
Mhm.
Eventually, we are talking about equity. Equity is will give you magic of compounding. If you get 15% for 5 years, you double your money. You get 15% for 10 years, your money goes up four times. You do 15% for 15 years, it goes up 16 times and 32, that so on and so forth. So regular investing, early investing, and long term investing is the only way you can become very, very, very rich. You can read about Warren Buffett. He started off at 15. Okay, today he's 90. Started with some $5,000, 10,000. Today he has $100 billion. He was 100% equity then. He's 100% equity today. Dividends are equal to billions of dollars, right? So read about them. Read books that will give you good experience. But yes, these are some guiding principles I can give you to start off your journey.
Absolutely. I think there is no shortcut to wealth creation. You have to give time, and you will realize over a period of time. Many people, do make the mistakes and then they realize. And smart people, they learn from experienced people. They listen to
Yes.
the serious advice of the experienced people, follow it seriously, and create wealth in a shorter period of time.
Yeah. See,
Now,
our younger generation. Sorry, go on, Neeraj.
अरे नो प्रॉब्लम. आई वुड लाइक टू, मैं रिक्वेस्ट करना चाहूंगा जो हम लोग का व्यूअर्स है कि अगर कोई भी क्वेश्चन है आपका, प्लीज फील फ्री, गो अहेड, टाइप योर क्वेश्चन इन द चैट बॉक्स. आई वुड लाइक टू आस्क अखिल जी. एंड इनफैक्ट एक क्वेश्चन है, दो क्वेश्चन है विक्रम प्रभु से. प्रभु जी ने पूछे हैं कि हाउ डज ग्रोथ स्टाइल वर्क्स एंड व्हेन, सॉरी, व्हेन डज ग्रोथ स्टाइल वर्क्स एंड व्हेन वैल्यू स्टाइल वर्क. ये विक्रम
There is
प्रभु जी से
no
क्वेश्चन.
Prabhuji, there is no markets are supreme. We don't know what markets will do tomorrow, right? So last 2 3 years markets for I mean last 2 3 years value has done very well, but prior to the last 2 years for 10 years value was nowhere. But because 10 years of no returns from value kind of stocks, markets felt that there is a lot of value in value and therefore it got re-rated.
हम्म.
And at that point of time in the last 2 years growth has not done well. We are seeing growth is coming back. So it is all, you never know when growth will do well, when value will do well. The easiest thing to do is to select managers who have a value style of investing and select managers who have a growth style of investing. For example, we are growth style investors. For us,
हम्म.
value is growth at reasonable price, which is your second question. GARP policy, that is our value definition, which means that I can buy a 30 PE multiple company if the company gives a growth of 40%.
हम्म.
But in the traditional value definition, buying a 8P, 9P, 10P company, but with single digit growth, maybe it doesn't work for us. So you have value style managers, you have growth style managers. You should allocate between these two styles, and uh, and then let the market do its magic over a period of time. Right?
Correct.
There's no real way to suggest that when value will do well or when growth will do well.
करेक्ट. सो विक्रम प्रभु जी से और एक सेकंड क्वेश्चन है. व्हाट इज जीएआरपी फिलॉसफी? डज द जीआरपी फॉलोज ग्रोथ और वैल्यू स्टाइल?
See, GARP is growth at reasonable price. So essentially, it is growth, as the name suggests. Now, like I said in my previous answer, for us, value means GARP. So for us, value means growth at reasonable price. Now, what do I mean? Like I explained previously also, that if I tell you that Neeraj, this is one company which is available at 40p multiple, 50p multiple.
Hmm.
Okay. Now, conventionally, what will you say? It's very high. It's very expensive. It's high p
Hmm.
multiple company, right? So it is not value.
Hmm.
Now I tell you that Neeraj, this 50p multiple company is coming to you with a 40% growth, profit
Hmm.
growth. Now what will you say? Is it value or is it growth?
Hmm.
So growth at reasonable prices, that if you're getting high growth at reasonable P multiple, that is equal to GARP. So 45% growth for a 50p multiple, price earning to growth will be just about 1,
Hmm.
and which is very very normal in terms of valuation. So conventionally it looks expensive. You just add the
Hmm.
growth element, it will start to look very very different. So that's the difference between GARP and the old definition of value, which was a Benjamin Graham definition of value, which was buying
Hmm.
very very cheap companies with a very high margin of safety.
Hmm.
And growth style is more of or GARP style is actually more of something which is evolving in emerging countries like India and some of the other emerging markets.
Okay, correct. Okay, so again, viewers, अगर कोई भी questions है, please feel free. Go ahead, type your question on the chat box, and I would like to ask that question to Akhil ji. Now, again, Akhil ji, coming back to our topic, you have beautifully given a guidelines. Ki how much should go into equity, how much should go into mid cap, large cap, small cap. Now, speaking about this new category, which are large and mid cap, right? Is investing large and mid cap option is a better option compared to investing separately in a large and mid cap. So you said 20% and 20 to 30% in the mid cap. So separately अच्छा है और एक साथ एक fund choose करना ही ज्यादा अच्छा है.
एक साथ
So
एक ही
what
फंड
is?
चूज करने का बेस्ट. अभी
Mm-hmm.
देखिए कि हमने वी लॉन्च दिस आर लार्ज एंड मिड कैप फंड इन 2019. फ्रॉम
Correct.
2000 2019 से लेके 2022 तक आर फंड वाज जीरो इन स्मॉल कैप, 50% लार्ज कैप, 50% मिड कैप. ओके.
Hmm.
Now, last year, when it was very obvious that small caps were looking very attractive in valuation, तो हमने हमारा 0% स्मॉल कैप को बढ़ा के 20% कर दिया, लार्ज
Okay.
कैप को 50% से 42 कर दिया, और मिड
Mm-hmm.
कैप को 30% कर दिया, 50 को 30. तो
Mm-hmm.
now if you see my portfolio, it is 42 large cap, I
Mm-hmm.
think 30 35 mid cap, and remaining is small cap. So you're getting, the fund manager will do all that stuff for you. You don't need to do
Mm-hmm.
all of those things. So best way is to actually buy the large and mid cap fund, and what do you call it, is fill it, shut it, forget it,
Mm-hmm.
rather than timing individual funds and then tracking individual funds. It is always good to have less number of funds, and funds which have a multi-cap mandate given to the fund manager. Simple. At least I do
Correct.
the same. I do the same thing.
Right, actually many a times we have some kind of bias that we can select our own stocks, we want to invest on our own selecting stocks. But I think in my experience, in so many years of experience in the market, I have realized that the best way and the safest and the most comfortable way, give the money to a good fund manager, let them manage the fund, and you enjoy the life.
Absolutely.
You follow the market, of course. If you're deeply interested, keep track of the economy, keep track of the market, keep on making changes, adjusting your investment time to time. But I think the best way, safest way, and the right way to create wealth is give it to a good fund manager, give it to a
Yeah.
good AMC, let them manage your money, right, sir?
Yeah, absolutely. You're absolutely right. And we learn this lesson only after we make mistakes. So it's okay
Absolutely.
if young people who are coming today will make some mistakes, and then at some age they will realize, like we realized, that eventually outsource the job, give it to a good fund manager, be happy with
Absolutely.
13-14%, and relax. See, everybody is doing their job and they have to do their job with perfection. Right
Hmm.
now, fund management or putting investing money in equity markets or debt markets is also a professional job. 24/7, you have to put your time. You have to understand businesses, study them, and it's not like a magic wand that you will come in market and you make money. So you have to spend a lot of time. Now, If you're going to start spending time to make money in stock markets, then it will distract you from doing well in your in your core professional job. So work
Exactly.
on your core job, make money, and give money to the manager to manage, and give to multiple managers. Diversify it.
Absolutely. Absolutely. I think that's what the whole thing is. The essence of the discussion today with Mr. Akhil is, yes, India is growing. We need to be a part of the growth story of India's growth story. And when India grows, we can ensure our personal growth only by investing, right? If we do not invest, then we'll not be a part of the Indian growth story, right? So
Absolutely.
Akhil, we have almost come to an end of the program today. What is your closing statement? Anything that you want to give advice to the investors? Your margdarsan क्या होगा?
नहीं सर, मैं एक ही चीज बोलूंगा कि चीजों को सिंपल रखिए, कीप इट सिंपल.
Mhm.
Investing is a very serious subject. It is about money. It is about growing your money. It is about then rejoicing the wealth you create after, when you need that money. You have to enjoy it. So every day lost is a serious loss in your journey of wealth
Absolutely.
creation. So I have this motto which I've been following for many years, and I keep sharing with my friends, partners, that
Mhm.
in if you have to make serious wealth in life, then you have to start early. You have to invest regularly, every day, every month. Whenever you have something left in your bank, put it and invest for long term. And there is no shortcut to becoming rich. You will become rich only with time. The formula of compounding is A is equal to P into 1 plus R upon 100 raised to power T. Focus on T, don't focus on R. That T
Where we don't
will
have
determine.
control.
Yeah, T is R, you don't have control, and T is in your control, right? So plan your finances well, take professional advice, follow your financial planner, distributor, etc., and trust them, and then let them allocate your money into different mutual funds. Do regular investing as far as possible through SIP, but do it for 20, 30, 40 years. Don't come for 1, 2, 3 years. That's my only limited point.
Absolutely. So, Akhil, it's a wonderful talking to you and lots of insight today, particularly young investors who are in the middle of their, just started their career or in the middle of, in their work life. I think it's a fantastic insight. Thank you so much. And looking forward to meet you again in another
Absolutely,
program.
Neeraj. It was it was for it's my first show on Paytm. So thank you so much, and it's been my honor and pleasure to talk to you. And wishing all your investors, customers, all the very best. A very exciting times for India. Be excited, work hard. Let's ensure we grow this country, and rest everything will be taken care of. Thank you so much once again. Best wishes.
Thank you so much. Thank you. Thank you, sir.